Hey, what's up guys? John here. We're witnessing the housing market simply eroding. The foundation of the housing market that was propped up by home flippers, real estate speculators, people moving due to the situation the last couple of years. Everyone was they had so much money. The cost to borrow money was basically zero. So people felt richer than ever. The stock market was all-time highs. Everyone just felt wealthy beyond measure. However, that wealth wasn't real, and neither was the stock market's gains, neither was a lot of the crypto gains, neither were the real estate prices. Now it's all coming back down to earth, and it's positioning itself very, very well for a first-time buyer, a new investor, to step in and get a piece of real estate in 2023. I think we're going to start to see values really come down in a big, big way. I think we're going to start to see some real fear happen here in this market. It's not my opinion. I'm going to lay out the facts here. I'm going to lay out what's going on throughout all the cities in America, what's happening in the rental market, what Wall Street's doing. We'll lay out what's exactly going on with a lot of these vacant homes and what everyone should be doing right now to position themselves for this massive wealth transfer that's unfolding. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on. Also, today's video is sponsored by my company, Great Credit Fast. That's greatcreditfast.com. We help new investors fix their credit so they can position themselves for the best financing to buy real estate. We are already helping so many people. We're on average probably moving 110 to 130 items from people's credit reports per day. We're helping a lot of people. So if you have a credit score below 750, call us for a free consultation. 561-430-5900. That's 561-430-5900. Here's what's going on in the mortgage market, and then we're going to move into everything else. So right now, if you have perfect credit, to 740 and above, you're looking at about a 6.7%, almost 6.8% on a 30-year fixed rate. If you have the average credit score in America, 698, you're looking at a 7.63% mortgage, 30-year fixed. If you have bad credit, 640 and below, 640 to 698 to 680, you're looking almost 80% for a 30-year fixed. That's pretty crazy, considering the fact that 12 months ago, that same buyer could have been in a deal for 4% or maybe less, right? So we're seeing huge changes. One of the biggest changes I think we're going to start to see is we're going to start to see a lot of mortgage officers, loan officers, lenders leave the business, and we're going to also see a lot of lenders that are aggressive and intelligent expand as there's less competition. The same thing is going to happen with real estate agents. We're going to see a consolidation in these fields. You look at real estate agents, for example, 1.6 million real estate agents. I mean, do we really need 1.6 million realtors? Probably not, right? You look in Florida, for example, 213,000 realtors in Florida. There's only 9.6 million housing units. Look in California, population is 40 million, and you have less realtors in California than you do in Florida. You have 205,000 realtors in California. They have 144,000 realtors in Texas. We're going to see a consolidation in the real estate market in terms of careers. Unbelievable, like an unbelievable change, I think, over the next 24 months with how many people leave the business, probably somewhere between 40, 50%. We're going to see a lot of people leave the business in the real estate fields. Right now, in November 2022, the average home price, the median home price is about $393,000, right? Sometime in August-ish, somewhere around there, the average home price is about $430,000, right? So we're already seeing a pullback, month-over-month change, down 1.5%, year-over-year change, 2.6%. Homes sold, down 5.5%, year-over-year change, down 35.1%. Pending home sales, down 2.8%, month-over-month change. Year-over-year change, down 35.4%. New listings, seasonally adjusted, down 4.3%. Year-over-year change, down 28.4%. You look at 30-year fixed-rate mortgages, it's down 0.9 basis points. Year-over-year change, up 3.7 points. 3.7 points. Pretty crazy. Saw this also on Twitter. Oakland, California, home prices, year-over-year change, home price declines in 2022, percentage declines in median sale price from May to December. May to December, Oakland down 21.9%, San Jose down 18.9%, Austin, which everyone had so much faith in, down 16.7%. San Francisco down 16.1%, Seattle, Washington down 15.6%, Sacramento down 14.2%, Anaheim down 13.7%, Boise, Idaho down 12.5%, LA down 12.1%, Stockton down 11.8%. I mean, most of these places, 7 of the 10 metros, biggest price declines are in California. I mean, well, that does not surprise me. You have some of the highest taxes, the most regulation, the most challenging climate for a business owner, an entrepreneur, for a landlord than almost anywhere in the country. So of course, a lot of the people that have the money that can afford to live in a lot of these expensive cities are probably flocking to other locations, going to be more inclined to do so. Plus that, and a lot of these markets, especially Oakland, Austin, a lot of these markets are supported by tech money. And what are tech people doing? What are tech employers doing? You look at Meta, you look at Twitter, a lot of these companies, they're laying off, they're shutting down their office space, or closing a lot of it, and they're starting to outsource talent. That's what's ultimately going to happen. I think we're going to see more and more declines in a lot of these markets in which people thought would have that tech money support unfold. You look at David Sachs. A lot of people know who he is from the All In podcast. He said he's just got offered office space in San Francisco, south of Market, the same price in 2009. Same price in 2009. It's pretty crazy to me. Another fascinating fact here is that there's 16 million, almost 16.1 million vacant homes in America. Now, when we step into this change in the economy, stocks are kind of softening, falling, some would call. I look at crypto, same exact thing. We're starting to see a lot of fear unfold. Now, a lot of people that own 16.1 million vacant homes, what are they going to do? They're probably going to list a large percentage of them for rent. Right? They're going to add supply to the market or list them for sale. We're going to start to see more and more inventory unfold. I did a video 9 months ago. Florida real estate's about to flip. And I was talking about the fact that in this video, there's 1.68 million homes that are just vacant, that just sit completely vacant in Florida, which is about 17% of the entire housing market in Florida is completely vacant. Pretty big number, right? Texas, 1.2 million homes are vacant. California, 1.25 million homes are vacant. What is that going to look like? Well, I think this is what it looks like. Wall Street, they're sitting on $110 billion for a buying spree to run out there and buy homes. And that's how this is going to roll out, I think. Institutional home buyers yield street / buying levels by 90% as it waits for a sharper home price correction. You look at Lennar, they're trying to sell 5,000 properties to big landlords. Wells Fargo, their banks, the entire bank, think about this, the entire bank for Wells Fargo, they only have 18,000 loans in their pipeline for the country. 18,000. It's down by as much of 90% from a year earlier. 90%. So how does that hold for real estate agents, for mortgage lenders, for tax assessors? Think about all the tax revenue that's going to get pulled out of the market as this economy changes. A lot of that funding is going to get pulled out. And that's going to greatly impact school districts, police services, fire services. It's going to impact cities all over the country. A lot of people just aren't anticipating the big change here. And as Jerome Powell continues to move in this direction, we're going to see just how big this change is going to be. Fed Chair Jerome Powell pours cold water on the idea that interest rate hikes are over. We still have some ways to go. Well, when they increase interest rates, what this actually looks like is the cost to service debt on credit cards, on auto loans, on existing personal loans. It just gets more and more and more expensive. And so as the cost of that debt continues to rise, it's going to impact a buyer's ability to qualify for financing. Because when you try to get financing for a 30-year fixed rate mortgage, the lender is going to say, okay, what is your debt to income ratio? Meaning, how much debt do you have in relation to your income? And can you actually afford this mortgage payment? So if mortgage rates have doubled and the home prices are starting to come down, it's going to be a situation in which it's going to favor investors, going to favor those that have their stuff together with great credit. They're positioned for it, right? It's not going to favor people that are, kind of sloppy, right? If you're sloppy, it's going to make things a little bit harder. Right now, U.S. rent prices fall at the fastest rate in 7 years. And 41% of Americans expect a housing crash. 41% of Americans expect a housing crash. And right now, look at Goldman Sachs. They're starting to cut jobs this week. They're talking about somewhere around 4,000 jobs they're going to start cutting this week, 3,800 jobs this week alone, 3,200, right? And so we're going to start to see a lot of this happen and ripple throughout the U.S. economy. And I think what we're going to start to see is we're going to see home rentals start to really come down. I think what we're going to start to see is landlords, we're going to see a lot of people just desperate to get a tenant that can afford to pay the rent and give peace of mind to that landlord. We're going to see retirees that thought they had everything tucked away, everything was going to be fine for their retirement. Now they're looking at inflation, looking at the price of eggs, the price of milk, price of produce, utility bills. They're going to pay attention to all this and say, you know what? I don't have enough to make it 10 years or 15 years. I barely have enough to make it the next 5 years. What am I going to do with this house? If I sell it, how long is that money going to last, right? They're going to start listing their homes for rent. People that are losing their jobs due to layoffs, they don't have the equity in their properties. What are they going to do? They're going to list them for rent. What are all the home builders going to do that, they have 1.5 million to 1.7 million homes that are going to finish construction? What are they going to do with these properties if mortgage rates doubled? They're going to sell them to investors that are going to list them for rent. I've been talking about this for a while. I've said about a year ago that what's ultimately going to happen is we are going to see rents come down. We're going to see rents come down. And that's what I think is going to happen. I think rents are going to start to fall. And if investors are buying these deals over the last year or 2 years at a 5% return, 6% return, what's ultimately going to happen when interest rates double? That's going to be a problem when they need to refinance these buildings. They're not going to be able to get the refi, and these investors are going to start walking away from their buildings. So if you're thinking about investing in real estate, you want to make a very, very smart and calculated bet. You need great credit, you need great financing, you need cash in the bank, and you need an incredible strategy. That's what you need. If you have all those things together, you're going to position yourself for wild success in 2023 in the greatest wealth transfer in human history. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people. Again, what's going on in the housing market and real estate. If you need help fixing your credit, we'd love to give you a free consultation at greatcreditfast.com. That's 561-430-5900, 561-430-5900. Subscribe here and on my second channel. It's an interactive call-in show and a podcast. And LinkedIn, Twitter, Instagram, TikTok up in the banner for short-form content. I'll catch you guys next video.